noticed that there were a few areas where um, there were some new items, which really were focused on the fact that we're going through COVID, and you had a few initiatives during the year that you carried out, as well as dealing with PPP, idle money, the typical things that you're seeing throughout other nonprofits as well. So I'll go through that. Um, but overall, we have completed the audit. We're planning to issue the audit today. Once we get past this, go through this meeting. Um, this will allow you to file the report on time, which is due by March 31st. There was an extension recently that was provided to nonprofits. However, you're still going to be able to meet the initial deadline despite all the challenges. So that's, again, something that I'd like to say is a good reflection of what state your books are in. Because you keep your books in good order and the audit goes pretty smoothly, we haven't had an issue in making the deadline, which is the March 31st deadline. So we're going to be issuing the report today. The audit was clean, so we didn't have any findings to report, no control related matters. There were no material audit adjustments. I felt that there was very good communication throughout the year, which is something that I think is very important to make sure there's no surprises. The areas of communication included dealing with PPP, the actual eligibility calculations, the forgiveness. Also, you had a number of grants this year that had some terms that required some attention to make sure you were recognizing the grants appropriately in the right period. We also discussed fiscal sponsorships, fiscal agency transactions, because of the program activity that you carried out in assisting some other nonprofits, in particular through some COVID-related initiatives. And there was also a good focus on your allowance for doubtful accounts for your loan portfolio to make sure you have the right reserves set up for your loans. And Martha and Mike in particular have an analysis that they prepare that we take a hard look at. And that was something that was an ongoing conversation throughout the year as well. So those were some of the areas that prevented us from having surprises at the end because we were all on the same page. From a highlight perspective, if you do have your financials handy, if you go to page 7, you can see that your total assets grew from 3.5 million to 3.6 million. So fairly steady, but still growth there. You'll see your cash went up $147,000 to $1.5 million on your balance sheet. For the year, you had a good amount of activity in your loan portfolio. You lent out $672,000 and to 27 businesses. I think, again, I keep seeing these numbers each year, and I'm very happy to see the amount of activity here. I'm sure you are as well. There was $550,000 in grants that were, or I'm sorry, in money that was paid back on the loans. So you lent out 672, you had 550,000 paid back. You will notice that your receivables, the loan receivables, you have a larger reserve this year. So as a result of doing the analysis on whether or not you have risk in the portfolio related to collectability, there was a $100,000 provision that was recorded this year, an additional one to take into account some of the risk that was out there in the underlying economy and in these businesses that you've lent to. So that is something that you reserved against your loan portfolio at the end of the year by about an additional $100,000. On the balance sheet, you'll see that you have SBA loans and idle loans. There's a combination there of, I think it's $168,000 in total. Just so you know, from an accounting perspective, just keep this in mind. The portion that relates to the PPP is expected to be forgiven, but the way the accounting works is we treated it as a loan, or you've decided to treat it as a loan for 2020, and then once it's forgiven, it'll be recorded as other income. So when you look at the bottom line this year, keep in mind that you have about 68,700, I think, of PPP money that's expected to flip into income. in 2021. So that's something you'll see on the balance sheet, but that's just an accounting item. It's just the way that the accounting guidance says to treat that. Then when you go to page 8, you'll see there was a decrease in net position of $277,000 compared to about a break-even result the year before. And the key components that drive that, I mean, obviously you have the typical operations for the year, that you have a number of things that are going, that are consistent. But then the things that really stand out, again, would be the $100,000 of additional reserve that we booked, or that you booked, I should say, for the allowance for the loan loss. That's a non-cash expense. That's $100,000. You had a reduction in your county funding that you had, a reduction of 15%, which equated to $69,000. So again, if you're comparing year over year, that's $69,000 that you weren't able to recognize this year. And then again, to cover that shortfall, I think you're going to have the benefit of the $68,700 PPP loan that will be forgiven in 2021. Just keep that in mind. I mean, that was meant to cover expenses for 2020. That was the whole purpose of the loan. So you take all those things in account, that helps get you to a better perspective of where the number really is on a recurring basis. And it's not truly recurring because, again, you have a number of things that just happened last year that you wouldn't have normally had in a typical year. The other thing that you'll see is that the grant revenue and expense are a little higher than what you typically would see. And that's because you did act in the capacity of a fiscal sponsor to help facilitate some of the PPE programs that were being carried out in the county. And you facilitated that through some of your partnerships that you have, with relationships that you basically acted on their behalf. And ran that program through your books. So that was about $239,000 of grant revenue and expense that's grossed up, basically came in and went out to support that sponsorship. That would stand out to you. And then really from an accounting perspective, the only thing that was significant really was just making sure we're comfortable that you recorded the PPP money appropriately in the books that we had already talked about. The footnotes do have a few disclosures, again, regarding the continued uncertainty related to the state of affairs as far as just getting out of COVID and just still the impact of that and how that could still impact your organization. You had a subsequent event where you had PPP2 that you borrowed in 2021 of February of, I can't remember if it was 64 or 68,000, Mike, I can't remember. But it was about that much. I was about to say it.
$68,700.
68.7. Okay, so the 64,000 was the first draw, I believe. The 68.7 was your second draw. So that's disclosed.
Actually, it's just the reverse. Last year was 68.7. This year was 64.3.
Okay, good. Thanks for clarifying. So then I think when you look at the statements, that's pretty much the highlights of the key things I wanted to bring to your attention here. And I'll take any questions if you have any.
Matt or Mike, there was a one of the PPP loans required a certain threshold, and there was discussion about that, and we decided we were okay at the time. Did that work out?
I believe so.
Yes,
PPP too.
Matt, the second PPP required that we show that to be eligible, businesses had to show that there was a 25% reduction in revenue in any one quarter. And Matt and I and Aaron worked on it to get a, to be sure that we were that we qualified. We submitted the application to KeyBank, and they approved it. They submitted it to the SBA, and the funds are in the bank. And what we're doing now is we're using those funds. Aaron just, in fact, today moved them over for tomorrow's payroll from a special account where those funds are segregated, and then we move it into the payroll account as needed. And that's to ensure that when Mike Bucci and Matt help us fill out the forgiveness forms, that it's easy to track.
Good deal. Excellent.
Matt, could you also, oh, go ahead, Jim?
Now, I was gonna just go over two notes. In note 2 on subsequent events and audit and finance, we had some discussion, and I'm expecting that there might be some revision, Matt. A revision from the text we have in front of us.
Help me, Jim.
Okay, these are the PPP loans, and are we going to reference the first one as well? I know, or I just had the impression.
Oh, you know what it was, Jim? It was actually, I did check that. It's actually disclosed in
And another note. Okay.
note 6. Yeah, so I didn't end up changing that, but I can refer to it if you'd like.
No, I recall now, I did see it as well. And then the value, the March date is going to be watched. Mark in subsequent events.
Oh, that'll be today's date. So I'm going to issue the report. Once these are good with the board, we're in a position to issue them today.
Right, and then just a quick question on note 14 on sponsorships, which seem to be important this past year. We don't identify those for whom we are sponsors.
Yep,
No.
it's not required under the financial statements. So it's really up to you whether or not you want to disclose that information.
Yeah, I don't know, Mike Tucker, whether you have a view on this or.
We can certainly do that. There's only a handful, and Matt and I can catch up after the call and document that.
If you think it's good disclosure, if you think it's not relevant.
Well, I think it's relevant in the sense if a member of the public reads it, they'll see the types of the organizations that we're helping, as opposed to guessing who we're helping.
Was Berkshire Taconic, that's a sponsorship disclosure, right?
Right, Berkshire Taconic, Hudson River Bank and Trust,
Yeah.
and on the inbound side, on the outbound side, we handled a $100,000 foundation grant for the Galvin Foundation, and we did the Hudson bonds. I don't think we need to disclose the 140 recipients of those grants, but certainly to document the money that comes in, Matt and I can put those four in the note in proper context.
Yes.
Thank you. That's a good idea. Matt, one other thing, could you explain to us what might happen next year because of the ever increasing amount of federal funds we're receiving?
Oh, okay, yes.
Audit.
Yeah, so I meant to actually say that as one of my highlights. You also drew $250,000 in additional SBA money. So you continue to grow the program. Each year you've been successful, like if I can remember properly. I mean, I think it's almost every year for the last 5 years. I don't know, Martha knows better than me, but I think you've been successful in getting draws of SBA money pretty successfully each year. This year there was $250,000 in new money. I think you have more. You also have more to be drawn that was awarded to you that will be in 2021. So what Mike is referring to is that once you get to a level of $750,000 of federal money, you require a single audit. Some of you may remember, I don't know how many years ago it was now, but you did have a single audit for the SBA program in the past.
Yes, we did.
And I did it, so I remember it. So basically, it was like a 1 year or 2 year type of thing because you met the threshold, then you went below it. You've been below it. We've been monitoring it and calculating it every year to watch it. We anticipate that you're going to be required to have a single audit in 2021. And the way it works is you take the outstanding balance of the loan and you use that as, it's not based on the money you draw in any given year. It's based on a cumulative type of effect. So that's why it becomes something that is reaches that $750,000 level. So that means you'd have to have a compliance audit, which just is another level of audit. You'll have a report that's specific to compliance with the major federal program, which is the SBA program. And then we would have to do testing of your compliance of the rules that you're supposed to follow. In the audit we do now, we do more of it's not a compliance audit specific to that program. It's meant to identify compliance related issues that could impact the financial statements that I just went through with you. That's what the audit is for the,
And what we are planning to do next in April, now that the audit is completed and the Paris reporting with the ABO is completed or about to be following this approval, is meet with Matt and Erin and I. Erin has done these before. Matt has done them, has done the actual audit. But rather than get to January of next year to see if we were in compliance, we need to be sure we know what we're in compliance with. And so we're going to review those and be sure that when it comes time to audit, things are we're not catching up. We're just reporting on what we've done.
yes, that would be my recommendation, is to make sure that you know what the items are that you have to comply with, which you already know that because you have to do it anyway to operate the program. So it's really more of identifying what those things are that are going to be subject to audit.
Any more questions, discussion?
Mr. Chairman, I just had one thing. I don't like a $277,000 loss, and I mentioned this to the Audit and Finance Committee. As Matt indicated, we did add $100,000 to the loan loss reserve, which is a paper transaction. Our portfolio is stellar in the sense that I think we only have one, possibly two people who are in delinquent, and it's only 30 days. When Martha and I did this analysis, we gave scores to businesses looking out, not knowing how they would come out of the pandemic in the long run, and that's why we added that. As Matt indicated, there was $68,000 that we weren't able to book until this year for PPP because of the regulations. So the 168 would bring us down to 107. You'll recall our initial budget for last year included a $60,000 loss so that we could take money from the DNJ land sale and allocate it to programs. That would bring us down to 47,000. We did make a $15,000 unbudgeted contribution to the Berkshire Taconic CEDC Business Continuity Fund. And so we were really $32,000 off budget. And when we did the revised budget in June of last year, we projected with all of those factors, a $24,500 loss. Again, I'm not, I just want to put it in context. I think that, and certainly I know when the supervisors are going to, want to better understand how we got there. I do think that based on the incredible amount of additional work, the amount of loans, the amount of grants, and the ability to deliver during a tough time, I feel better about where we are, but I still don't like to see that number.
Mike, do you want to include this explanation in the minutes? You feel that way?
I can work with Lisa on that. Matt and I did craft a paragraph in one of the footnotes that at least puts the information out there so it's explainable. So, but thank you.
Anyone else? I'll entertain a motion to accept the audited financials, the 2020 audited financials.
I'll make a motion, Rick.
Sterling second.
All in favor?
Aye.
Aye.
Is anyone opposed? The motion's carried. Next up, Mike, the treasurer's report.
Matt, I think we want to thank you for all of your efforts, as well as Nicole Overbaugh's efforts and all of the people who worked with you on the audit, and especially doing it remotely for the first time. And I want to particularly thank Erin McNary for her efforts internally. And we have the benefit of having Kathy Lyden now in that department helping as well. So, and Lisa also provides information for the audit. So I want to thank the three of them as well as your team for working through this.
Here, here.
Yeah,
Thank
thank
you.
you, Mike. Hey, you guys did a good job, so thank you.
So I know you have three other clients to present.
Yeah, I'm gonna
to,
leave.
So we're going to let you go.
See you later, Matt.
One to the other. Yeah, thank you. Have a good day.
Thank you.
Mike, you want to do your treasurer's report?
Yes, thank you very much. February 28th report. The assets are up $222,000 and our liabilities are increased by 236. So we're basically a flat balance sheet, and most of that increase and decrease relates to the loan fund. So, you know, unless there's a specific question, you know, we do see cash, you know, in the operating account going down because as you are aware, we have never taken any of the interest earned from the loan funds into an administrative fee. And all of those funds have gone back into the loan fund for future borrowing. And as we, you know, get to the end of this quarter, we do want to look at that and then have a discussion with the Audit and Finance Committee and the board. Any questions on the balance sheet? On the profit and loss report, while there are a few categories that are up and down, I am very happy to report that we're only $1,230 below budget on income. On the expense side, we do have a couple of areas where we're off budget. One is under our new initiatives. We have spent $14,000 versus budgeting $5,000. The $9,000 under new initiatives is the payment to Patterns for Progress for our membership. And I'm not sure, you know, that's where we put it last year because it was the first time we did it. I have to go back with Aaron and we have to look at, you know, was that really a membership? And that's the same issue why we're over on public relations. We show $5,300 or $5,400 at the bottom where we only budgeted $3,000. And the $5,000 is where we paid the chamber for our membership there. So if you look at the other areas where we're over budget, $4,000 on office expense, that was $2,800 with the down home software, which I had not budgeted for, although it was an annual fee, so I should have. And we also had $2,250 that we paid out to Kaiser Realty based on the issue that we had years ago booked $4,000 when they put a deposit down from the IDA and the deal never closed. And then there was also you know, the $1,300 in dues and subscriptions where we're over budget, but I'm not concerned too much about that because that's more of a timing issue as to most of the memberships that we had budgeted for this year are paid, but we have put some of the payments out further in the monthly budget. So, you know, when you look at those variances and you and go and look at the bottom line, we're showing a negative $19,700 against a budgeted $7,000 loss. So we're $12,000 off the budget at this point. That does not count the $63,400 in PPP because at the time we did the budget, we were not aware of the program, let alone our eligibility. At this point, I'm holding that in reserve and would certainly come to the board before we make an allocation of those funds. But you know, and we also had budgeted $60,000 again this year. And when you look at the, negative being off 19,000 for 2 months, if we took $10,000 from and allocated that, because right now we only allocate that those funds at the end of the year. We're not in bad shape for the second month of the year. And as you know, 2 months don't make a year, and we're conscious of the areas where we've overspent, and we'll be working on those as well. Any questions? If not, Mr. Chairman, I believe Lisa has 2 compliance matters that need to be reviewed by the board.
Do you need a motion to approve on the treasurer's report?
Yes,
Jim
please.
moves to approve the treasurer's
I'll make a motion to approve the treasurer's report. Rick?
Dave, I think you're on mute.
You're right. Sorry about that. And a second, please.
Second, LaPen.
All in favor?
Aye.
Aye.
Any opposed? Carried. Next up, the statement of internal controls. Is that Lisa?
Yes, this is just a required statement that the ABO needs us to pass.
It's part of the packet.
Right.
Any questions?
Motion to approve.
Second?
Second, LaPen.
All in favor?
Aye.
Aye.
Anyone opposed? Carried. Next would be the 2020 investment report. That's also in the packet. Questions? Motion to approve?
So moved.
Here's Finnegan.
Motion and a second. All in favor?
Aye.
Aye.
Anyone opposed? Carried. Mike, you're up again near the president report, CEO report.
Thank you. We've just received some of the statistics for February. County sales tax for January and February is down $300,000 from 6.3 million last year to 6 million this year. It's about a 4.1% drop. You'll recall at the end of last year, the county sales tax was up 3.1%. So again, the winter months are slower, but it does show that there's a little bit of a lag in the ability to come back. And I think we're going to continue to watch that, as I know the county is. Unemployment is at 5.5%, which is just a decimal or 2 point above where it was last month, but certainly not as high as the 6.5% that we had last August, but certainly not the 3.2 that we had a year ago. On housing sales, new listings are up. New listings are down 30%. From 96 to 67 homes. Closed sales are up 50% from 36 to 54%, or 54 homes. The median sale price is up 20% from 295 to 354, which as you know, is $60,000. Now, homes for sale currently on the market are 384 versus 642 last year at this time, down 40%. So the market is really tightening up. It's been good for the county in terms of the mortgage and the towns in terms of the mortgage recording tax, but it is putting a lot of pressure on working families in terms of their ability to find affordable housing. Moving to our projects, we've got a lot of deadlines in the next day and the next week. Obviously, the work that Lisa and Aaron have done on Paris, it's a very tedious process and there's a lot of information. It's over a 60-page report, and that is for both CEDC, a separate report for the IDA, the Capital Resource Corporation, and the Hudson IDA. And They did give an extension, but we didn't need it. So I want to thank everyone involved, and particularly Erin and Lisa and Kathy. We do have due tomorrow our UDAG grant, and Martha and Lauren and Brian Zwag, one of our technical assistance consultants, have put a lot of time and effort in that. We did pre-submit it to the USDA on last week, and they gave us comments, and in coordination with our partners at Pattern for Progress, we've revised the report to better reflect what the person who reviewed it at the government told us. As Dave mentioned, our annual meeting is April 30th, I believe. We sent, I believe we're sending out, if we haven't, a save the date. We're very pleased to announce that Dr. Carly Drummer has agreed to be our speaker this year again. We thought that, based on the feedback and the response, positive response we received last year, going at the and remember we did the annual meeting in October because we canceled it in April. This would be a great place to pick up from where we left off. And we're very grateful to you, Dr. Drummer, for agreeing to do that. We have sponsorship letters going out tomorrow, which is about the same time, 4 weeks in advance as when we did it last year. We also will be doing it virtually, and Randall Martin from Martin AV will be handling the AV part of it for us again. We will have, we'll probably cut down on some of the electeds, but we'll certainly have Chairman Morell and Mayor Johnson, as well as our state legislators. We also are, tomorrow we're excited about the fact that the 620 Union Street hotel project, which we have worked on for over a year in part of our Hudson IDA role, is going to close. So we're reviewing legal documents with on that project. Again, in this market, closing on the purchase of the building is not necessarily guaranteeing that the project will come to completion, but in this market for building a new hotel, $14 million hotel in Hudson, it's a big step. Martha and Lauren, with support from Erin and Lisa, are working on submitting our 2021-22 SBA grant application. I think we reported that we were pre-approved or to apply for up to, not guaranteed that we will get it, $180,000 plus compared to the $99,000 that we were eligible for last year or this year. And that's a result of the increased volume that Martha and Erin processed in 2020. We also have a deadline next week with Hudson Valley Creamery with the Office of Community Renewal, April 5th. They had hoped to be able to create enough new jobs to receive $300,000. With COVID, they've been delayed, and but because of the deadline and not wanting to give the grant up, we've worked with the state and the company, and they're going to qualify for a $60,000 grant based on the 4 jobs they were able to create. And the state has said they should apply for a phase 2 so that they can get up to the, it's $15,000 a job. But we did want to work with them not to leave anything on the table. And also we didn't want a situation where the Office of Community Renewal felt that it was a project that had failed, because that would reflect poorly on the county's ability to apply for grants in the future. And as you'll recall, that is a grant program for economic development through the Office of Community Renewal, which only municipalities can apply for, but the county applies and then contracts with us to manage the grant. It will result in a somewhat smaller administrative fee because the administrative fee is based on the a percentage of the grant. But our budget took into account that because we knew when we were preparing the budget that they would not be eligible for the full $300,000. We're also working with Clock Estates, the distillery in Claverick, and they've asked for a 1-year extension, and we've the Office of Community Renewal is willing to grant that based on COVID. Finally, we are excited. We have 22 companies signed up for Career Jam. We are going to reach out to a few of you to see, particularly in manufacturing and healthcare. We do have Pat Darrow, who's been doing work for us as a intern, available to post your materials on the site. When you go and you look at the fact that 80% of our businesses are under 10 employees, not everyone has a person in HR or a person in marketing or a person at the company whose job it is to do these types of things. And so it falls on the owner of the company who, with all the COVID responsibilities or his assistant. So, we have found that it's very helpful, especially because of loading all this up on a technology platform to have someone who can do that for the company if they're willing to commit. So we will send out another reminder. We're particularly, and we also have, initially we didn't want to include businesses who weren't from the county, but we are looking at people like ShopRite and Stewart's and Key Bank and Berkshire Bank who have operations in the county. Our goal was not to create a pipeline for people to learn about jobs outside the county. We wanted to highlight and promote county businesses first, both in Columbia and Greene. And we've had great support from the Workforce New York office and from the college and from Jim Church at Questar. So thank you to all of them, and especially Dr. Drummer, thank you for the help that your workforce staff has provided us. Finally, we continue to work on Columbia Comeback. And I want to thank Ileana Morales for her efforts on all of these initiatives. We have cut back where we do the e-blast every other week, and on the alternating week, every other week we do the conference call. We're getting, we have a few regulars on the conference call, and thank you, Neil Howard and Dr. Drummer. But we also find that we're getting people from the arts and cultural venues. And we also continue to handle one-off questions. Finally, both Lauren and Martha from the Lone area and I are getting 2 to 3 new business calls a week. I have a list of 29 development projects from the longtime Hudson Valley Creamery and Fish Farm to the new pocketbook factory mixed use development in Hudson, and inquiries on housing, inquiries on all types of businesses. And Martha and Lauren are getting different types of inquiries, but nonetheless for businesses looking for loans. I'll update you next month and perhaps a memo in between on broadband. The county is looking to explore whether we could assist them with additional broadband work, and they might increase our fee based on utilizing some of the federal funding that they're getting, because they want to be in a position that once that money is released for broadband, that we've helped them put the plan together. But again, it's in the infancy, but we did have a County Board of Supervisors broadband meeting last week. And they did raise the prospect of increasing our contract back to its original amount if we could hire someone or assign someone to work on broadband. So, any questions?
Thank you, Mike.
Thank you.
That Mike's report there needs an approval. Could I get a motion, please?
So moved.
Second,
Rick.
all in favor?
Aye.
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 Anyone opposed? It's carried. Thank you. Next up would be what's usually first, the minutes. The minutes from our February meeting. They're in the packet. If you've reviewed them, could I get a motion to approve them?
Motion to approve, Galvin.
Second,
10 seconds.
and all in favor?
Aye.
Aye.
Anyone
Aye.
opposed? It's carried. Next up is a membership update.
Yes, as you can see from the profit and loss, we did very well. Carol's program that she put in place at the end of the year with the letters that Dave and I sent to renewal members, as well as over 200 prospects, has us on budget at $32,000 for membership. That does include the accruals for people who had paid from last year as it rolls out 12 months. Dave and I are in the process of sending out approximately 200 letters for the sponsorship. Generally, membership and sponsorship dollars are the same. And we found that there are companies that can't or are uncomfortable joining, but they're not uncomfortable marketing their business through a sponsorship. So, I think that that's how the program has kind of worked in the past. And so we're going to get those out tomorrow. We're hoping to pull anyone that's already given. So
Let me unmute there. Committee reports. First up would be the executive committee. We did meet. It was entirely in
Executive session.
executive session, so there is no report. Governance and nominating committee, there was no meeting. Loan committee, there was though. In fact, I think there's some additional items as well.
Yeah, we did meet, and Martha, if you wouldn't mind doing the portfolio review.
Yes, thank you, John. As was mentioned earlier, we have one client who's 30 days past due, and we're in communication with that business. It's a very clean report. The SBA is actually making payments on that loan as well as several other loans in the portfolio. We have two separate buckets of loans that are receiving SBA payments thanks to the CARES Act. One is our older loans, and all new loans that are made through the end of September are receiving 3 months of payments by the SBA. And Erin is doing a terrific job of keeping track of which loans do receive payments and applying the money that comes in from the SBA on a monthly basis. I also just want to remind the board that Train Time Express is in deferment, so they don't show as late. And it's too early to tell whether or not they will have a season this year due to COVID-19. And the outstanding balance on that loan is $39,000. So we're watching it very closely. And I believe if no one has any questions, that needs to be approved.
So, I'm sorry, go ahead, Dave.
We get a motion to approve the portfolio review.
So moved, Galvin.
Second,
Cummings.
we have a motion and a second. All in favor?
Aye.
Aye.
Is anyone
Aye.
opposed? Carried. So now there's some loan approvals you need.
Correct.
Well, very briefly, I want to talk about our fast forward loan. We've similar to the rapid recovery loan, we're sort of repackaging and remarketing our loan program. And the fast forward loan will be very similar to the rapid recovery loan. Instead of a $15,000 cap, it will have a $20,000 cap. Applicants will have to meet all the same criteria that they did for the rapid recovery loan. It will have a faster turnaround, and it's designed for businesses that need a small amount of capital and need it quickly. And just like the rapid recovery loan, it only requires internal approval, and we just keep the loan committee updated on a monthly basis.
And
And do you want to add, Mike, to that?
our thought process is we have $770,000 available to lend in the CEDC loan fund. And if we draw down the balance that we have available, $475,000 from the SBA, we do have $1,580,000 on the street. So, we thought that, this is more of a marketing exercise, and Lauren and Martha have been working with Ileana to develop some cool marketing materials. But, it was a way to put ourselves out in the public again with something fresh. And, if we get to a certain volume, we can cut it off. And if we don't get there, we can in 3 or 4 months announce a program for manufacturers or a program for hospitality, or it's just a way to remarket so we can get some of this money on the street.
Very good. The last item on the loan committee would be the Spencertown Market loan request.
And actually, we're going to ask the board to consider another loan request this morning, but just to update you on the Spencertown Market loan, the loan committee decided we could bring this to the full board if two conditions were met. One was that the owner's 2019 taxes would be filed. They are late, but it turns out their accountant wasn't able to get it done in time for this meeting. And the second condition was that we secure a personal guarantee from the building owner, the property owner. I did speak to the landlord. He is happy to provide a personal guarantee. And so we hope to bring this to the loan committee and board again in April.
Very good.
Yep. And so I'm going to turn this over to Lauren. You should have all received her loan request on Friday.
All right. Thanks, Martha. Yes, so Cafe Mutton is the loan request that we're putting before you. It's been recommended by the loan committee, so over to you all now. She is requesting $35,000, and this is Shayna Lowe. She's Cafe Mutton in the space that used to be occupied by Relish at 757 Columbia Street in Hudson. And, Shayna saw a smart opportunity in that this space already has a fully built out kitchen. It's up to code. Her vision here is really the kind of quintessential neighborhood cafe. She really feels that Hudson still, Hudson has a lot going on, but it doesn't really have, in her opinion, that just cozy corner, welcoming neighborhood cafe. And that's what she's going to create with Cafe Mutton. So it's going to be rustic American fare, sourced as much as possible from local farms. She's going to create a very unpretentious environment. She very much is focused on being kind of between casual and upscale. She's going to remain, in terms of price point, she'll remain below the Maker, below Rivertown, but she's going to need to charge enough to pay her staff a living wage, which is something she feels very, very, she's very committed to that. She will be opening May 1st, and she's going to start with takeout breakfast and lunch. And then she will introduce dinner service in July. The thinking there that, more folks will be vaccinated, more comfortable with dining out. She will have a full liquor license. And currently she is executive chef over at Bartlett House in Ghent. Previously, she was sous chef at Fish and Game. And before that, she spent many years in New York, in the city, at both 11 Madison Park and Prune, which are, as many of you probably know, very, critically acclaimed restaurants. So she has great experience under her belt. In terms of the financials, and her projections, we feel good. We feel confident that, based on her credit, her other monthly obligations, which are somewhat minimal, a $35,000 loan is very manageable for her. Over 3 years, she's going to be creating 6 new full-time jobs, potentially more. It's a business that's 100% female owned. She knows how to run a profitable kitchen. She She's really learned how to pivot at Bartlett House with COVID and just has a lot of experience, as I mentioned. She's well connected in the industry, and one of the things that we really like as well, and this was included in the materials I sent you, is her menu. She's created a very focused and simple menu, relatively speaking, and we like that that's going to help keep her food costs pretty manageable. One thing to note is just that in our conversation with the loan committee, there was a question about her startup HR costs. Her payroll was, it mentioned covering 2 months, but the amount in her business plan was showing more than the first 2 months when we looked at that itemized monthly cash flow. And so after going back and reviewing this with Shayna, it's clear to us, and what she really intended was to be including approximately 2.5 or so months of startup costs, because she's just not sure exactly who she's going to need to hire. And as we said, she's going to be introducing dinner service in July. So she was giving herself a little bit of a greater cushion than just the 2 months. So we want to make sure we mentioned that and cleared that up, because that did come up in the loan committee discussion.
Thanks, Lauren. Questions?
I thought the presentation was excellent. I mean, we get a real sense of what she wants to do, what the security package is.
Right. Okay, so we need an approval on this. I'll ask for a motion.
I'll move. Jim LePen moves to approve.
Second. I need a
Tish
second.
Finnegan?
So we have a motion and a second. All in favor?
Aye.
Aye.
Anyone opposed? Carried. Thank you, Lauren, Martha, John. Next item is Workforce and Education Committee.
Our principal focus right now is on Career Jam. We did enter into a partnership with the Workforce New York team to do a virtual job fair. And we're hoping that the experience we get from a virtual Career Jam will help us with that. They have funding from the Department of Labor. They have funding from Hudson River Bank and Trust. And in the past, we have been a $2,000 participant in these career fairs that we did with the college and Workforce New York in the newspaper. And we are planning to participate again at that level. Any questions? Thank you.
Thanks, Mike. One last item to approve would be the confidential board evaluation summary. We've done one of these for each committee. I think this is the most important one though, right, Lisa?
Yes, that's correct. We actually have to send this to the ABO and publish it on our website.
Okay, thanks. Any discussion?
You know, Dave, Jim LePen, the only one on the list that I would note that may need some discussion is the one where the vote was sort of 9-4. Everything else was fairly consistent, but the items, board members are knowledgeable about the authority's program, financial statements, etc. So 9 of us agreed and 4 of us somewhat agreed. That was the only possible area of comparison.
Yeah, we should address that. Can we get an approval for this report though?
Coming, so moved.
And I'll second.
All in favor?
Aye.
Aye.
Anyone opposed? It's carried. I don't see anyone from the public. Is there anyone from the public here? No? If not, that's it. Motion to adjourn.
So moved.
And I'll second.
If you don't want to adjourn, you can stay. See you all later next month.
Just notice that it's 9:27, so.
Bye.
Bye-bye.
Thank you.
Thank you, everyone.
Dave.
Take it easy, everybody.